traders, Gary Wagner here, just about 7 o'clock in Honolulu, 1 o'clock in New York. It is Thursday, the 30th day of July, 2015, and this is the Daily Report for Gold and Silver. We are coming to you a little bit early on today's show. It is my belief that we've seen a fundamental break in the precious metals markets, and my belief that we've seen absolutely the possibility, the potential for this market to begin to move lower. This all on a belief that there will be a rate hike in September by the Fed. We do have the Dow Jones Industrial Average, which was trading lower for the better part of the trading morning, now showing some positive gains, and we do have the dollar returning in terms of resurgence to the upside, which I believe is its primary trend. Currently looking at gold, it is trading approximately at 1089, 1090 in that area. We've seen it trade to a low of 1081 and a high of 1097.50 on the day. And that, of course, is COMEX gold, which is currently trading. Spot gold, roughly the same thing, shows off about $5, $5.50 at 90.91 in that area. Low 82.82, high 98.69. Now, silver is also trading lower on the day, although nominally lower, in essence unchanged, currently at 1474, the low 58, the high 81.50. Now, as we said at the beginning of the show, we do have a very, very strong U.S. dollar today. That also in relationship to the anticipation of rate hikes beginning as early as September, of course. When we look at the dollar, it's currently trading up almost 0.75%, 97.66. So we have a very, very strong dollar. You can see that on this Japanese average chart. This, of course, being our daily Japanese average chart. And when we convert this to a standard candlestick chart, what you'll see is that the move that we're witnessing in the dollar currently is even more pronounced. You can see that right here. This is the third day in which we've seen higher dollars. On trading or trending markets, we talked about the fact that we had a bullish harami. Yesterday's trading activity, in essence, completed that and gave us confirmation on the bullish harami, but more importantly is a variation off of a three-river morning star, and today is the confirming candle, which is why we'll issue a buy signal in the U.S. dollar today on trending markets. Now, in relationship to what that means for gold, as I said, gold is currently trading lower this morning. It's seen a low of around 81, so we're well off of the lows. But when you look at the actual move in the marketplace relative to the dollar, what you'll see is this is almost all dollar strength in today's market. So for example, and I've just put up our Kitco Gold Index, when we look at this marketplace today in terms of gold, strength in the dollar is actually taking it off about $5.90. Normal trading is moving it lower, but nominally lower about 60 cents, and that's where we're getting our net change of off $6.50. Different than what we're seeing in silver. Silver has overcome about halfway the net change of a strengthening dollar being +4 in terms of normal trading, but the dollar taking away 8 cents of value, and that's why we're getting this nominal net change of approximately 4 cents on the day. So as I also mentioned really at the beginning of the show, we are absolutely seeing our first signs of a genuine break in the market. Now, the market has been trading around this particular area, meaning 88 to 91 over the last hour or so, but we absolutely see a bias to the downside. My belief currently is that we are factoring in the rate hike that everyone now anticipates will begin in September, and this is where we start to factor in that price. When we look at our daily chart in gold, the one thing that we can see is we haven't really broken below this consolidation range that we have seen. Although we have a lower market, I anticipate it closing lower on the day. I don't really see it firming up. We really need to see it break below 80 and 79. This low here would be our first real signal that we are headed lower. My anticipation is 65 on the downside to a low of about 34, 1034 on the downside. Maybe not on this particular wave, but that's the anticipation in terms of where I believe this market could head to. When we look at our weekly chart, though, it really appears as though we're going to see this market break lower, and you can really see on this weekly chart, this is that low that we got. Now, this low here is at around 70.71. I was looking at this low here is where we would want to see it close. And really, when we look at this on a weekly basis, which takes away a lot of the noise, of course, in the market, our trend is still a definite downtrend in the market. There's no doubt. We now have an absolute down week in the market, but we still have, in terms of the range itself, we would really want to see it break below this. I don't anticipate that we'll see that happening on Friday, but I would look for that next week. In other words, that's where I believe that the market should head, anywhere between, call it 71 and 69 on the low. If it can hold, in other words, if it can break this area and not hold this particular price point, then I believe we're pretty much off to the races, and we will see this market definitively head lower. Traders, lastly, in terms of looking at different gold charts, do you want to look at this very, very short-term gold chart with our moving average, MACD, in there? We can absolutely see that on the MACD, we've gotten this market to cross. We can also see that momentum has gone to the negative side, now at a negative 141. But we can also see clearly the area that I talked about. This is that 1080 area that we really want to see a break below, whether it's tomorrow or on Monday. It's very important. And then, of course, we have these lows down here that we talked about at 70. I don't think that they're as critical in terms of a technical support level as this 80 level. I think that this 80 level is really the level to watch, simply because when we look historically, you can see two occasions, and then this third occasion here where we've had this low really act in a supportive manner on a technical basis. However, if you look at, we had this false breakout, or false positive, I should say, right in here, which corresponds to this move down, in which we saw it then just move back up. We had this first break come in right in here, but the break actually, or the crossing, came a little bit before, as this market was sitting here. In terms of our moving average, a 21-day is sitting at 1094. We're currently at 1088.80. Traders, we have been short this market. We have weathered a couple of moments in which our stop came very, very close to being hit, but was not hit. That was simply because we put it above this particular price point here by putting it at 1107. This is where we had major resistance. And this is that sideways trading activity that we've witnessed. So I believe there's a real, the reason I said there's a real potential and not we're there is we really need to see the market break through this 1080. At that point, as I said, we've got the technical confirmation that we are looking at lower pricing ahead. Now, traders, as you know, I've sidelined any positions in silver. My sense is that it's starting to move independent of gold. However, we've seen it channel lower. We've also seen it find support at 1450. When we look at a couple of our Western technicals, we do have our cross in the MACD, but look at how oversold this market is in terms of a stochastic indicator. So we're getting mixed signals in silver. My sense is that our money is best put in terms of potential return in gold on the short side. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.